What's good, YouTube? It's your boy Will coming back with another video update. As always, please remember to like and subscribe to the channel, as it does help with the YouTube algorithm. And remember, you can always look me up on IG and Twitter for other stock news and updates. But let's get into it. So today, as you guys can see, we did have another positive green day with a 4.12% increase, going from a low of the day of 34.59 to the high 38.77 before we did pull back and give a little bit of that gain back. However, we do have some really positive things to talk about today. As you see, towards the end of the day or the last quarter of the day, we have this nice consolidation. A good way you guys can verify consolidation, I'm about to teach you with the MACD and the RSI. Anytime on the MACD you see the curve start to flatten out and straighten out and stick close to that center line as possible, that is a key indication of a stock consolidating. Consolidating is just a fancy word for it trying to build a floor. For example, before this run-up we had this morning, it built a floor yesterday at close. As you can see, we had a very similar scenario where it was wanting to consolidate. You see it start to flatline towards that center line a little bit. It built a floor for the run-up today. Again, at the end of the day, we see that consolidation towards the end of the day going into aftermarket, meaning it's building a floor for the next run-up. Hopefully, we'll get tomorrow on our run, climbing this ladder back up, hopefully back into this secondary channel up above 49.86 to 64.72. This would be our last point of resistance for the next run-up. I have a bullish idea that if we get into this channel up here and get comfortable, this will be where we take off to next on that rocket ship heading to the moon, right? Or that's the hope, right? But for now, we are facing this resistance here at 49.88. As you guys can see, we have multiple touch points back here about a month, 2 months back. So this is the very strong point of resistance we need to break above. And once we do, we want to start building, consolidating, and climbing in this next channel above, so that we can get above this $64 mark and then on up to the moon as we take off to space, right? So really good outlook, really good day today. Again, we did continue respecting this line of support that we did identify in this trend on any chart that you look at, the 4 hour, again, the 2 hour, the 1 hour, even the 30-minute chart. Again, we do have these little false breaks, but as you can see, the stock is not comfortable at these lower dollar amounts, and it wants to continue to climb, as it shows us from the chart, right? That's all really, really bullish sentiment you want to see in a stock, especially if you're wanting it to climb, and especially if you've already entered your buying period, right? Which, again, as we've already discussed, today was our third green bar on the MACD. Again, it doesn't mean you can have a red day. As you guys see back here, when we converged, we still had 1, 2, 3, 4, 5 red days prior to the climb up. But as you do see clearly, we do have a higher propensity of green days, which is exactly what we want to see. Looking at the market, today was a very heavy red day. Please don't forget, yesterday at around 1 p.m., President Biden did come out and address everyone, essentially with the Afghanistan situation going on. So this type of day after an announcement like that is expected. Jerome Powell, the SEC chair, did also come out and speak today. He had very little impact on the market. It was already a red day from the start, to be honest. We can verify that going into the indices chart. As you see, the Dow was down 0.77%, the SPY was down 0.66%, and NASDAQ was also down 0.93%. So a very heavy red day in the market. Big names too: Google, Amazon, Microsoft, Facebook. I mean, you name it. Tesla. They were pretty much red. Amazon is another one. There was also some really bad reporting news for Home Depot. If you guys do watch investment news, they missed on expected sales, again indicating a slowdown in, I guess, the consumer purchasables or DIY market, right? It's just it's a bad negative sign that people see it that way. For us, it didn't really have an impact. As you see, AMC still had a great green day today. Wasn't the biggest green day, but it still was a green day in my opinion, which I will always take a green day over any red day, right? I mean, that's just me. But again, that's the update essentially on AMC. I did want to touch one specific topic today. that I wanted to basically, I guess, ease you guys into. I don't want to overwhelm you guys with too much information because, again, when I get carried away with stocks, I'll jump into a subject and I'll just go down that path. If you've ever spoken to me directly, for those that do know me personally, I'm very passionate about stocks, so I can talk your ear off. But I'm going to try to compress my knowledge in easy, malleable chapters, okay? So, options. Options chains are super important. I always touch on it because it gives you the outlook people have on a stock. When you are looking at an option chain like the one we're looking at for AMC, right? And you see that calls have 492,000 calls purchased versus 223,000 puts. What this should tell you as an investor is that more people feel the stock is going to go up versus the stock is going to go down. A put means negative or going down. A call means positive or climbing. So when we continuously look at this day after day, video after video, what I'm implying to you is that more people feel AMC will go up. Now, what is an option? So as an investor, you have the ability to go out and buy shares of a stock. Currently for AMC, those shares cost $37.16. You can buy 100, and that's $3,700. Or $3,716 you would spend on those 100 shares. Investors who've been in the market investing for a while have other alternatives. Let's say I don't want to spend $3,700 on AMC right now. I'm comfortable, let's say I'm comfortable investing $142. Okay. Well, this option contract here at the $38 strike, as you see, strike 38, is $1.42. Why did I say 142? Options contracts is a contract for the control of 100 shares of a stock. So when I say I'm going to go out and buy one options contract, what I'm essentially saying is I'm going to go out and pick up control of 100 shares. In this example that I'm using right now, it's $142, as you see here, indicative of 1.42. It's multiplied by 100 because it's not just one option, it's option contract for 100 shares, right? So in that event, I now have full control of AMC at $142 for 100 shares. Now, this contract expires specifically on August 20th, 2021. So between now and whatever this AMC, or in this example, AMC does between now and August 20th is under my control. If the stock price tomorrow shoots up $50, I essentially make $50 per share, right? Well, there is also something on options called delta, gamma, theta, and vega. I'm not going to touch on all of them today. I'm only going to touch on one of them, the one that's most important to an investor, which is delta. Delta implies to anyone looking at this contract, how much money will I make for every $1 AMC were to go up? So in this example, if AMC shoots up $1, so we go from 37 to 38, this option contract would make $45. Again, we're multiplying by 100 because the option contract gives you control of 100 shares. So if tomorrow AMC goes up $2, right? Then this contract would net me a gain of $90. Kind of get the idea where I'm going with this? So that's why option contracts are so important. That's why you see when we point out, or when I point out volume and open interest, is because there are 12,000 contracts here at this $38 strike. As you see at 39, there are 7,000. At this 40, there are 35,000 contracts. Each contract has 100 shares. You can do the math. It multiplies really, really quickly, right? So that's as much as I'm going to dive into options today. That wasn't the point of the video. The point of the video was this piece, aside from the options chain, is implied volatility. Implied volatility, as you guys see here, is 156.50%, right? So implied volatility is nothing more than an estimated prediction of how high or how low a stock will swing. So going into this chart, let me go back, get us ready so I can better explain this. Implied volatility. Implied volatility, here, we'll use this explanation instead. Implied volatility is a trading tool. Implied volatility shows the market opinion of a stock's potential move but it doesn't forecast direction. If implied volatility is high, the market thinks the stock has potential for large price swings in either direction, up or down. It doesn't tell you which way, it's just telling you that it has the potential for a big swing. Why am I talking about this today? The reason why I'm bringing this up today specifically, implied volatility is at 156%. If you're looking at legacy or the chart previously, you can see we are down towards the bottom of this indicator down here, which is implied volatility. If you go back to May 12th, the last time we converged over the red line in the MACD, our implied volatility was sitting in 1.89, so we're relatively close to where we were last time. Actually a little bit lower than last time, right? Which again, if you're looking at the stock, is another positive indication of where it's going to go, right? With implied volatility being rated at 156, there is a deviation you can use, or a strategy you can use to calculate the price swing, which is this here. In this example, they're using a stock at $50 with implied volatility at 20%. Well, when you multiply a $50 stock at 20% implied volatility, it gives you $10. What this $10 indicates is that this $50 stock has a potential to swing $10 in the positive or negative direction, which in this case means if you were looking at the stock and looking to buy it and looking to pick up an option contract or a stock up or a share, with this implied volatility, you should have the understanding or know withal to know, okay, so then I'm investing 50 with the potential to make it 60 or the potential to make it 40, right? So now that we go back to AMC and we see that we're at 37.16 with 156% implied volatility, we can easily do the math to make that determination of how much of a swing we think AMC can make, which in this specific example, we're talking about a $57 swing. Well, you take a $57 swing and you add it to the 37, you're talking about a stock price at $94. As I had previously just explained to you guys when looking at the chart, we have a resistance point here at 64. Well, 95 would be up here. As you can see, it's extremely higher than the last time we ran up. But going back to this other chart, we are also lower than where the implied volatility was the last time we took off on this run. So that's why it's important, and that's why I pointed out to you guys, because this is things you can easily track. At some point in January, I believe our implied volatility was close to, well, here, we can actually look at it here. After that run up on June 2nd, our implied volatility shot up to 366%. Back in January, on our last run up, our implied volatility got up to 581%. So, and that was with a $20 swing, because we went from $1.92 to $24. Over here, we went from $15 to $72 with essentially $186. Right now, we are in the $30 range, $37 range with 156% implied volatility, with the potential for the stock to shoot up somewhere into the 90s. If we keep climbing in price steadily and the IV keeps growing as well with us, then this swing potentially has the ability to go higher than 100 or even further. And that's not even discussing or bringing into account the short shares that currently are held against AMC, which again we've already touched base on previously, that it just recently increased to 85.8 million short shares, or essentially $3.18 billion worth of short shares against AMC. In either case, guys, again, I think you get the point. I'm going to keep diving into options to teach you guys fully how to understand, purchase, and buy options, because I feel they're a great multiplier to your, investment whenever you're buying shares. I used to just buy shares until I figured out and learned fully how to manage options, and since doing that, my earning potential has skyrocketed. They are challenging, they are difficult, but once you learn the fundamentals with time, it makes investing even that much more thrilling. It's super thrilling and super, exciting when you invest money in a stock that you predicted, studied, worked at, analyzed, and you made the right prediction, or you were right in the way you were viewing it or analyzing it. It's 100 times more fun when you've done that and you've also included options into your arsenal of investments, because again, as you guys can see, you can get into options contracts relatively cheap when the price has been going down for a steady while. So what I mean by that is we started in the 70s and we went down to the 30s, basically cut this in half. Our IV went from the 300s, basically cut it in half. So now we're sitting in the low 30s because again they couldn't bring us lower than this floor that we see from the chart. But they also lowered our IV, which means other investors, or as they call them in the market, whales, are also seeing that the implied volatility has been cut in half, yet we're still sitting in the 30s, which makes it more attractive to them to put their money in, because why wouldn't you put your money in when a stock is in a buying period? Your RSI is essentially at 50. Actually, this one gives a better indication. Where is it? I saw, yeah. See, as I mentioned yesterday, now we're at 50, so now we're absolutely neutral, heading into positive territory or continuing into that positive run. And on top of that, the options prices are affordable. They're not 6, 7, 8, 900 like they were 2 months ago. Talking about you have control of 100 shares for 142 bucks. So you could either spend $3,700 for 100 shares of AMC, or you could spend 142. Now, don't get me wrong, some of these contracts are still expensive. On my IG, I recently posted, I picked up a couple of these 145 strikes, and I paid essentially, I think it was 190. Yeah, it was last week. It's on the video story. If you go into my IG and see it, it was like 190 a contract, and I bought 2. So that was essentially $300 plus that I spent for control of 200 additional shares of AMC. But again, the potential or how much I can return if and when this squeezes, because it's not if, it's when, because it's going to squeeze. The one variable we just don't know as investors is we don't know when the shorts are going to cover their position. But that they're going to have to cover it, they're going to have to cover it. One way or the other, good, bad, or the other, they're going to have to cover it. It's almost like it's someone knocking at the door, and Ken Griffin's like waiting to answer. We just need him to answer the door so everybody can get some tendies, and everybody can enjoy this trip to the moon we're going to take. Anyways, I rambled enough. I'll get more into options as we go down further into videos, because I want you guys to fully know and understand how to use these to your advantage, because again, it's only going to unlock the earning potential you guys have when it comes to the investments you choose to make in stocks you choose to invest your money into. If you have questions or comments, leave them down below. I'll be happy to address them. Again, other than that, guys, I'll catch you guys in the next one. Deuce.